terms of financial reporting, there are a number of issues that affect financial reporting. Financial reporting is basically recording business transactions, and then you can't change their position as of December 2019. That means that they have to make adjustments to their report. If it is not so significant to change their report as of 2019, then they may just have to do some disclosures in their annual report 2019 or even 31st July 2020. Certainly, their financial statement may have one or two issues that would look at the impact of the coronavirus. And so it is important to assess it from that perspective. But let me first of all talk about the impact from the business perspective. I mean, the IMF report shows that there's going to be a minus 8.8% inventory obsolescence because demand has gone down. I mean, there's a dip in sales, and so a lot of inventory may go bad. How do you account for these from financial reporting perspective? You need to make provisions for receivables because customers or your business partners or contacts may not be able to make payments as expected. So how do you deal with your receivables? Receivables looks at the amount of money you are expecting from the customers that you have dealt with in your financial transactions. What about provisions for liabilities or claims and then refund that you have to make because there's been cancellation of contracts and so on and so forth? Impairment of financial instruments. For those in the banking sector, they have to deal with this because a lot of financial instruments may be impaired. That is, they will not get the value for which they were expecting. There will be loss of investments, increase in termination benefit because we know there might be layoffs, So you need to look at how you account for these in terms of employee benefits, and negotiate with employees and account for these. And the utilization of PPE. PPE here doesn't stand for personal protective equipment. It stands for property, plants, and equipment. I mean, the machines, the assets that the companies use in generating their revenue. Also, in terms of suspension of borrowing, because some works may be going on, companies are incurring interest, but yet the works have ceased because of the coronavirus pandemic. Also, significant changes to lease agreements, because it's possible that some tenancy agreement would provide for a situation where when you are not in operation, the payment that you are making in occupying a lesser's apartment would have to cease. And how do you report on these as well? About the transactions or the business transactions that have taken place and its impact on the activities. You would have to report on these. So how do you deal with these issues? Okay, there are some questions that we are asking that are the impacts of COVID-19 creating uncertainties that cast significant doubt on the company's ability to continue as a going concern, because the essence of providing financial information to users about the state of affairs of a company, about its performance, is to provide a basis for assessing whether the company can continue to be in business. And obviously we know that the decisions, the directives that have come from governments and from the World Health Organization and so on has created some uncertainties about the going concern status. And it is the duty of financial reporters or preparers of financial statements to determine the going concern status of organization. That's a big thing in financial accounting. So what's the worst case scenario that is realistically possible? Are companies going to continue to exist? These are questions that accountants and auditors must determine.
I think it's a good initiative by our Dean, Professor John Gastchie. He initiated it and all the heads of department bought into it. It's a good initiative. In this period that we find ourselves, it's difficult for us to have face-to-face seminars. And so it's one way by which we can engage with our stakeholders, particularly our students, alumni, our colleague lecturers, and the general business community, sharing ideas on the impacts of the COVID-19 from the business perspective, And the idea is to take it from the various perspective of the various departments within the school. So last week we had it from the finance perspective, and today we are looking at it from accounting perspective. what I did personally is that once we got the link, okay, for the e-seminar, I shared it especially on all our student platform. Hitherto, I wouldn't have been part of a lot of the students' WhatsApp groups, but since the pandemic set in and we've been having virtual meetings, I have to get myself on the platforms of virtually all the groups. I mean, the student groups that the cohort that I'm teaching, and so I'm able to share it on their platform. So I did that, and the response was positive. Many of them were excited about it. For my postgraduate class, I teach MBA and MCOM, Advanced Financial Reporting. I did tell them that it's part of the lessons that we should be mindful of. So they are all supposed to hook onto it, because many of the issues that we're going to discuss today, in particular, borders on some of the topics that we've done in this semester. And so the feedback has been phenomenal. The students are excited and they have a lot to learn, because particularly in today's seminar, we did look at three key aspects of the department program: taxation, auditing, and financial reporting. Those are the three key aspects of what we do as a department, and so many of the students were excited to be part of it. Taxation is a current issue, auditing, and also financial reporting. Let me give an example of the financial reporting aspect, for instance. The International Financial Reporting Standards, which is a key component of what we teach our students so far as financial reporting, preparation of accounts is concerned, have provided updates on the standards that are used in preparing financial statements so far as COVID-19 is concerned. And these students are supposed to abreast themselves of these updates, because there's going to be significant changes in the nature and manner in which companies report on their business transactions, because the COVID-19 has great impact on them, like adverse liquidity issues, lenders' unwillingness to provide or extend support, issues about capacity and solvency of companies, strategic suppliers, workforce issues, because some layoffs. And in terms of accounting, you could see a lot of issues. For instance, you could look at receivables. When it comes to receivables from customers, it's going to be significantly affected. Revenue recognition, for instance, because once there's fall in sales, dwindling sales or loss of market, it's going to affect the revenue companies are going to recognize. There's going to be issues on lease cancellations, issues on underutilization of assets, issues on impairment of financial instruments like loans and other receivables are going to be impaired. How do you account for these? How do you make adjustments to your account? So COVID-19 pandemic has issues on financial reporting, and accountants and our students in particular must take note of all these things. There may be the need to fair value financial instruments again. In providing your financial account, you have to take note of some of these changes. Let me also throw light on something we call expected credit losses, for instance. Because of the COVID-19 pandemic, it is very much likely that there may be increases in the expected credit losses. Okay, that is a risk exposure so far as some financial instruments are concerned, because demand is low, sales certainly will go down, business revenue will go down, and it will also affect on customers' ability to pay for the goods, because individuals are affected, so they cannot buy the goods and services or pay for the goods and services as expected. And so if you are a company and you have given loans, let's take the banking sector. If you are giving loans to customers and their business have gone down, the recoverability of the loans may be affected, and so you may have to increase your expected credit loss. This is something that accounting students must take note of in determining the increases in the expected credit losses due to increase in credit risks, that is, customers' inability to pay for the loans that are being granted them, and therefore make provisions for it. So there are a number of accounting standards, I don't want to go into the technicalities, that students will have to grapple with and find ways of dealing with. And we would expect our students to understand the impacts and how to deal with them, and to be able to respond to issues of termination benefits. How do you account for employee benefit? Because some employees will lose their jobs. How do you determine employee benefit? Because normally in the financial statement, you need to determine the likelihood of the company paying off staff or giving them termination benefits whenever their employment comes to an end. Then that is anticipated, or that is projected. But now with the pandemic, then it triggers in that you have to terminate some employment contracts of employees. How do you factor all those things into your financial statements or your financial reporting? Certainly. I mean, in terms of the resource persons, I believe that it's very, very cost effective, having to get, people like Dr. Lina Chia, very busy person, Dr. Isaac Nyame, also very busy, and getting them to come travel all the way to Cape Coast for a seminar may be a bit of a challenge. But with the e-seminar, they are able to join us. On the other hand, it is not every student or every participant who can join, because it's a data issue. If you don't have access to data, so that's another thing you have to look at. If you have our students on campus, the question is, would we prefer to still go ahead with the e-seminar? It has challenges, because the students may be in the hall of residence or wherever, but will not be able to join because it doesn't have data. Or even if it has data, the network will not be that strong. So what I'm looking forward in the future would be a combination of having a virtual and then a face-to-face. So for instance, we could agree that we would have a seminar, let's say auditorium 900, where the participant will be there in person. But then for some of the resource person, they could project, they speak to us on a screen from wherever they are. So they could share their screen from where they are in the part of the seminar. So it's a combination. And then also at the same time, while the seminar is going on in that space, it could also be live, where you could also ask your question. So a combination of face-to-face meeting as well as meetings where people can join wherever they are. Yeah. Personally, I think we have to acknowledge and appreciate show gratitude to our Dean, Professor John Gastchie, for the initiative, because it's a very good initiative. I've learned a lot, even though I'm an academic in the area. I've learned a lot from the other resource persons, and even from the questions that were asked and so on. And so I want to appreciate him for the initiative. I want to encourage as many lecturers and students in particular to join anytime opportunity comes for us to have this seminar again. And we want to also appeal to our alumni and other resource persons or experts in the business community to come on board. If there's any topical issue that they want to partake and be part of this work, why not? We are ready to partner them at any time.
We are referring to a suspension of the tax that you have to pay. And that suspension is assumed in the government, because the tax payment is a revenue to the state. So if the government says, I have waived the tax for you, then I have suspended the payment from you to me. So government absorbs that loss. That is why the Constitution and Article 1742, that if you talk about an exemption, then it is a removal of the tax entirely. We say you are exempt from the payment of tax. Indeed, you are then not the focus of even the revenue, because you are not to pay. You can get an example that you were exempt from taxes for 5 years from the date of first harvest. Then it is not from commencement, but when you started your commercial production. So businesses need to know when their exemption starts.